Hi, welcome everybody to another installment of This Show Will Go On, where this is the Intentional Success webinar series, the Business Survival series. We're working our way through the pandemic. We're grinding it out every single day. And once a week, we pause to see, what can we learn from all of this? What can we do better? What do we have to look at next? And I'm trying to bring you those things. I'm pedaling as fast as I can, trying to stay ahead of you guys. I appreciate all your questions and input. And because you're making this possible, you're helping making this better, giving me some ideas about where you need some help and where we've come to. And I've got the next, this and the next three webinars mapped out because we're kind of getting to we're wrapping up this series and getting you to the point where we've taught all the basics. We've got you to the spot where you should be able to keep your business sustainable, extend the runway on your cash flow as long as possible, and let's get on down the road. And whether we believe business will get back to normal or not, the fact is between now and then, we've got to survive and we've got to keep our businesses going. And I hope I've brought some of that to you to help you give some more power to do that. So don't be afraid of the topic today. The agency model. This is a natural extension of everything we've been talking about for the past couple of months. And my goal for you is still that you are scalable. I want you to reduce the amount of risk in the business that you do. I want you to be prepared for years and years of streaming and hybrid events and being successful, making money at it, and learning to really enjoy all of this. We love the industry. We love doing shows. But we don't like the situation that we're in. And hopefully we're going to get you to the point where you can reconcile all of those things and get back to having some fun, doing some awesome shows for some great people. So if you are new to the series, and we are still getting signups, so there's some new folks here, welcome. Thank you very much. I'm Tom Stimson. I am president of the Stimson Group. Here's all the places you can find me. You will probably get a few marketing emails, though we're really not as terrible as some folks about sending things, unless I'm promoting something, in which case you'll hear from me just a little bit too often. But check us out, visit us on Facebook, shoot me an email, schedule some time. But I also need to give the shout out to Avixa, who has been supporting this webinar series from the get-go. They knew that you guys needed help, and we got together and said, hey, this is something that I want to do, and this is something that they needed support, and we got together and we've been bringing this to you, and I can't thank them enough for making this possible. So we're going to continue with this through the end of the month. And I want to point out that next week there's a very important event. We have the Live Events Forum next week. And it's immediately following this webinar. So I'm going to have to finish on time, maybe a couple minutes early, so we all have a chance for a quick break. Turn around, bam, hit the Live Events Forum. Scan the QR code, sign up for this thing. I will try and post some stuff on social media, some links on there so that you can find it as well. I'll put something on the replay page this afternoon so that you can find this event. But do join us. They've got a great panel, some state of the industry presentations. These are your people that have put this together. Check it out. The forum is one of the best things that we've done in the live events community in the past 15 or 20 years. So, and actually the first one was in Dallas, probably way back in the 90s. So it's not a new thing, but it gets better and better and better. So I am still helping folks. For those of you that are new, or for those of you who've already been through this once with me, 15-minute checkup calls. You don't have to hold it to a hard 15 minutes, but I do need to have some parameters around it because I do get these things backed up. I did 4 of them yesterday. So do schedule some time with me. If you've had one before, have another one. Things have changed in the past 2 weeks. So I'm happy to help you out for that. So let's get into our topic today. Every week, I talk to folks all the time, and the recurring theme in the conversation is like, well, here's what we need to do until we get back to business as usual. And business as usual, as I've said for a number of months now, really wasn't all that great. And why would we want to go back to that? And we've wrapped ourselves in a lot of challenges and issues about how we do business. that we might want to rethink going forward. And we're not tied to how we've done things in the past. And that's the great thing. There's always a silver lining in things. And the great silver lining in this pandemic crisis is that we all have a chance to do a do-over. You get to reboot your business. You can make it anything you want. You do have some structure and overhead and things you've got to maintain or divest, but we can be a different business and be a business that's more scalable and more profitable. So the question I have for you is that, how much revenue do you need in order to bring your operational team back full time? Have you asked yourself that question? Is that a discussion around your office? Well, that's a fictitious number, because wouldn't it really depend on the kind of revenue? Because honestly, the revenue you're seeing right now isn't going to bring your team back. Even if you had 10 times more revenue, there's very little justification for bringing a lot of the core team back that you had 4 months ago when you were doing lots of events in ballrooms all over the city, all over the country. Now you're doing studio-based events, virtual events, a little bit of hybrid, maybe an outdoor thing or two. You don't need a ton of folks to do this, and you don't do it every single day of every single week. So it's the wrong question. You don't need revenue to bring your operational team back full time. You need the kind of revenue that needs that operational team, which honestly, we're not seeing in the very near future. So I see owners that are frustrated in spite of the opportunities in streaming events. They can't afford to keep their team around. And at the same time, they need skill sets that they wouldn't have in-house if they didn't have the team. So how do we sort this all out? Now, I get it, but it's never stopped you from doing shows before because you didn't have somebody who knew how to do something. You've always figured out a way to do that. And this situation is really no different. And going forward, it's probably the best model for you to be better at finding the help you need than hoarding the help that you might need, right? So let's walk into this. So today we're going to apply the exact same skills that in business tools you've been using to a slightly new business model, which is as old as advertising, right? Now, I can't hear the word agency without thinking of advertising agencies, which makes me think of Mad Men, which makes me think of Don Draper, who's a fictional character. But the fact is, the things that came out of that character's mouth, well, some of the things, were quite brilliant business ideas. And there's a whole subculture of people who take quotes from the TV series and expand on them and apply them to business principles. And I'm not sure that people didn't go through business books the writers didn't go through business books to extract these quotes and these ideas. So being an agency is not a huge departure from what you've done forever. Understanding how an agency works is going to help you adapt in the business climate that we're in right now. So instead of the agency light that you've been doing, perhaps unknowingly, we need to take a look at what it means to actually be an agency and how that's going to benefit your business going forward. Business as usual is not around the corner unless you use this time to make the opportunities we have now the usual. And if streaming and hybrid events is your usual, then there's an enormous amount of business out there, and you can make some good money at it if you adapt your business to do that. So let's think about revenue for a second. What does revenue tell us? If a salesman comes running in, and they will, because they sold $1 million project, let's pick a big number because we want to be excited about it. What does that revenue tell us? Well, by itself, it doesn't really tell us anything. And depending on the salesperson, it may tell us less than nothing. You may not have actually won anything. They just got somebody smiled at them who had $1 million worth of business. Revenue tells us that we are going to, in the future, very soon, incur some costs of goods sold. In order to earn that revenue, we're going to have to spend some money. It also tells us that we're probably going to use some of our overhead, which we're very excited about because we were wondering how we were going to pay for that. And here's some revenue that's going to help us do it. So our overhead is suddenly going to get used to deliver something. And through all of that, we're going to earn some sort of gross profit, which is going to be a contribution to the business to offset all the other overhead costs that you have that aren't getting paid for by this event, right? So revenue is a tool, and that revenue gets divided up and spread throughout the needs of the organization. But revenue in itself creates a need that was not there before, which is the cost of goods sold. So in the agency model, okay, what's different is that everything you do is a profit center. I know that's hard. Everything you do is a profit center, okay? Get your pencil ready. You're going to have questions for me. Everything is therefore a cost. All of this affects your profitability every time you do a job. Your overhead costs, your fixed costs are inside of a profit center, which for most of you on your books doesn't make any money. You know, you don't look at your, you know, they might make a net profit because you have gross profit that's making a contribution to your expenses, and maybe there's some money left over, but it's only because you had money left over, not because you looked at your expenses as a profit center. And if we can keep our expenses down, our fixed costs down, then we will rely more on cost of goods sold, because by reducing overhead, I'm creating a greater demand for cost of goods sold, which is work that has to be done because I have revenue. So if I have everything in-house, I have all the staff I need, all the inventory I need, and I don't have to go out of house for anything to serve that $1 million worth of business, then I have no cost of goods sold. Everything is overhead that's been allocated. However, most of you, it's a balance. You have some overhead that's going to get applied to cost of goods sold, and then you also incur some outside cost of goods sold, right? Any overhead in the agency model that doesn't create value for the customer is excess. One can argue that you don't actually need it. You should be doing everything you can to get rid of it. Overhead to reduce costs is a finance decision. So if I hire employees to use as a direct cost to apply them to jobs sold, that's a finance decision. Okay, it is cheaper to have them full-time as an employee than to outsource on a job-by-job basis. Likewise, if you're going to improve your brand, you know, that's an owner's decision. That's an investment in the future of the business. It's an investment into potentially higher revenue for less cost. In other words, to improve your profits. If I can get people to pay me more money than they're paying somebody else because my brand is better, my brand was a good investment. Right? Overhead such as the cost of holding equipment, like a rental inventory, is a finance decision. We own equipment because it is less expensive than outsourcing equipment. But here's where we kind of messed up. For many of us, we own equipment and we maintain employees because it's easier than outsourcing. And we overlook the fact that we're spending too much money for internal resources compared to what it would cost us to outsource. And as a result, we've been living with smaller and smaller margins over the years because the cost of having internal resources keeps going up, while the external resources are fairly constant and they define market price, right? So if it costs us more to have internal resources and the market price is here and our internal resources are here, there's not a lot of differential there on making money, on top of which I don't have enough income spread out over the entire year to utilize all those internal resources consistently to make it smarter to have them than it would be to outsource. Now, I know all the arguments about, well, we don't have an outsourced pool. We're in a region of the country where we don't have suppliers. There's no sub-rentals. There's no freelancers. I get all that. Set that aside for a minute because you created that problem. Right? That's something that you actually have more control over than you think you do. Now, remember last week, we talked about the gig economy, right? So let's make the assumption that that gig economy is going to grow and flourish in this new frontiers that we're dealing with, which means you and your competitors are together going to develop the resources that you're all going to share to be more successful at your business and make more money. And you're going to get over all the hurdles that are in your brain right now about, you know, oh, they work for my competitor, or, you know, we're having to fight over the same resources. All of that's solvable. Trust me. Tons of other industries have solved this and have thrived with the circumstances for years. You can do it too. But remember that value chain. You know, I use this visual to talk about aggregating resources, and that, you know, between the buyer and the seller together, you're joining forces to aggregate resources. And your resource pool can be either in-house or out-of-house resources. Okay? And for a short-term project, an agency might contract resources for a period or a project. Okay. Once they latch onto a resource and they start moving them from job to job because they really like this resource, or this is a great tool, or everybody wants this, then they tend to bring them in-house. Whether or not that's a good financial decision or not remains to be seen, but the tendency is to want to have control over that resource, which makes perfect sense, and strategically, it's probably a good idea. But unless there's new work sold, that probably means that someone else is going to be moved out of the in-house team and made an outside resource, because it's a zero-sum game. For the given amount of revenue, you don't add expenses. You end up trading them. Now, the concept here is that we need to think about the difference between overhead that's based on work that you have sold versus overhead that's based on work that is expected. This whole webinar is about changing your mindset. Your job as an aggregator, your value to the customer is your ability to source talent and capacity on their behalf. Agencies jettison overhead because if they can't immediately apply it to the next job, project, or client, they actually have no use for it because it doesn't create any value for the customer. In other words, they can't resell it. We, as an industry, have had a tendency to develop overhead based on work expected. How many times have you bought a major product thinking, well, I've got a little bit of rental for it here, but if I have it, I'll have more? Everybody raise your hand. You bought something because if we have it, we will sell it, right? We'll hire this person and we will create work for them, okay? We've all done this. This is what we do. But I'm telling you now, rethink that, because that's wrong. On a short-term basis, that's not a wise decision. You don't have enough work to sustain overhead based on, I hope I'm going to get this work, which is, again, how we've been doing this for years and years and years. So now we need to look at our business differently. Okay. Sorry, I'll answer some questions here about the scheduling here in just a minute. Stand by. Hey, I'm on a roll. Look, new ways to look at business. Everything in your business is a profit center. Every internal department can use insourcing and outsourcing to balance demand and profit. Just wild hair scenario. If you had a situation, I had a client with this problem once. They took on a project for a major client where basically they were just churning invoices for them. And the client was doing most of the buying. They want all the invoices to go through their supplier, who basically project managed that. But it required adding team to his accounting department in order to make this work. It was a ton of accounts payable. And then corresponding, they had to generate accounts receivable back to the customer to recover the cost for everything that they were passing through the business. So it was a business nightmare without the extra help. But he couldn't get it through his mind that he could outsource and bring in temporary labor to do accounting or bookkeeping or APAR on a project basis. Okay, you can outsource just about anything. If you're looking at your business in this agency model, you have these profit centers, but you also have internal customers. And I've talked about internal customers before as part of the service chain, the value chain inside of your business. We all work for somebody else. Your customer, and you're the customer of somebody, and you are their customer at the same time inside your business. Okay? In the agency model, because everything's a profit center, the price for an internally sourced product will have to be competitive. Okay? And I want to earn the repeat business. I want to be, if I have the equipment in-house and it's a profit center, I want that equipment to be attractive to my jobs so that it will be used as opposed to outsourcing. Now, why would I not? You're the owner of the company. Why can't you control that? Well, you can, okay? But let's imagine you have gear You have a show in Hawaii and you're on the East Coast. Yay, you got a gig in Hawaii. Yay, there's a gig in Hawaii. You can look at your equipment and say, hey, I've got to get it across the country. I've got to get it on a ship. It's got to get over to Hawaii. That's 14 days. We do the gig. That's a week. We got to get it back. That's another 14 days. My gear is going to be out for 5 weeks, and the client's willing to pay a good, 4 or 5 day rate on it. But you're looking at where could that equipment be used elsewhere and versus outsourcing it. So the job would be wise to say, well, wait a minute, if I can pay a week and a half and get it from my East Coast warehouse, or I can look at pay it for a week and get it from a probably more expensive local vendor on it, what makes the most sense, right? So we have to look at all of these things on a pretty much globally to understand what's the best business decision we make. And it's easier to do if you look at every job as a buyer that has choices about where they buy, right? Now, in this scenario, anything that is not a cost of goods sold is considered an investment in future business. For instance, sales, right? So sales is an investment in future business. Doing a pitch for a customer who doesn't buy from us yet is an investment in future business. Writing a proposal we don't win is an investment in future business, right? So we're going to have to do some things to invest in future business. Having a beautiful office space with studios and customer-facing areas is an investment in future business. I can't charge any of that to a job. Now, in this model, departments will fulfill demand and jobs are just customers. Now, we can be kind of agnostic about the jobs. They are a customer, but they are just customers, right? They're going to buy whatever makes the best sense for that job. A project manager for a job shouldn't have to go find more gear. They're going to go to your department that provides gear and say, here's my gear order. And that department is going to find the gear for them in the most cost-effective way that they can. The gear department should do that for them, not say, well, we're out of stuff. You need to go find it. We don't, that's not how this works. In the agency model, every department's job is fulfillment, which means they may have to go find the resource, which means that's their job. And that becomes vitally important in keeping the business going, right? So thinking of all these departments as profit centers, let me take you through a couple of examples so you can get your head around it. You're doing this, let's say once again, we're doing events that involve travel. Wow, that just seems like so long ago. So we're doing event-related travel. So we've got to get crews somewhere. We've got to get suppliers there, whatever it might be. We can charge the client for tickets. And many of you would simply have your project manager, or God forbid, your salesperson, buy airline tickets, book hotel rooms, secure rental cars, request per diem, deliver per diem by hand to show site. In a agency model, your travel department, which is not necessarily a separate group of people, it's the idea of a travel department, procures the travel. Now, it might be your project manager, okay? They can be the travel department for their own project, okay? But they have to secure it at the best source, and there's a profit to the company that is built in to the price that the job pays. So look at it as a markup for the airline ticket. We add a markup or a margin to it, and then we sell it to the job. In other words, we charge a fee to the job. Now, don't get wound up about, oh, my client won't pay for that. We have other ways of dealing with this. This is about how do you run a profitable agency. You charge the job what the resource is worth. You resell it to the customer at a reasonable margin. Your expectations of margins are based on the idea that everything you have is free and it's all in-house, and you're looking at 40, 50, 60% margins that you're expecting on jobs. In the agency model, you're going to be, if you have 20% margins, you're probably doubling the net profit that your company was making a year ago, right? So it's a very different way of looking at numbers. So anything that a department does is billable to the cost of the job. Now let's take something a little bit harder, because, travel is easy. If we went to an outside travel agent, she'd add a fee to it. We'd pay it. charge it to the job, and off we go. Having somebody inside your office do it shouldn't change the fact that there's an associated fee with securing tickets, financing it, and assuming all the risk for getting things changed. Now, equipment. If you have a rental inventory, that is a department in your business. It is a profit center. The cost of carrying the equipment, the depreciation, the rent, the repair is overhead for the business, and we need jobs to offset that overhead. However, once we start to prep that equipment for use, we're going to use it. There may be damage. We have deprep. All of those things are charged to the job because we're getting incremental expense. We're adding cost of goods sold because we sold something. Now, if I need to subrent something, the equipment department theoretically provides it. Okay, I need this. Great, we'll go get it for you. Now, as the owner, you may say, I want to buy that because I want to own it, because I want to make more money in that department. Or you might say, I don't want to go buy that, go get it out of house. You might say, we have 20 of these, but we need 25. I need to buy 5 more, or I don't want to buy 5 more. Right? Or make this substitution and make this upgrade. All of these are done inside the departmental decision. The customer, the job, simply makes the request and we fulfill it. Okay? We don't burden the job with what it takes to get that done, because the advantage we give one job becomes a disadvantage to another job if we do that. All the jobs should be able to buy, a screen should cost what a screen costs regardless of what else is going on, just like you sell to your outside customers, right? So the inventory department has to find the best way to make a profit with the inventory that they have. Now, in the agency model, you can still tell the customer that something is free, right? The salesman's greatest tool. Oh, we can comp that. The job is still going to pay for it, okay? We incur a cost when we give something away. Who's going to pay that cost? Well, the job's going to pay the cost. The customer may not think they're paying the cost, but the fact is there are no free car mats in cars. You're paying for it somewhere. Okay? It's going to come out of something. So let's go to another department. Let's go to production management or project management. Budgets, drawings, planning, and execution are all billable to the job, but you don't win every job. So a job that is not billed, in other words, you didn't win it, can still incur costs, but that goes into an unbilled cost of sales, which is an overhead expense. Now I can measure the efficiency of the sales department by what it costs to acquire a new customer, because unbilled cost of sales adds to the cost of customer acquisition. And if I have to quote 10 jobs to win 1, all those unbilled costs of sales go against that one job, against my record of jobs. I don't get to charge that job for that, but I get to judge the sales effort and sales management by a 10% close rate and the associated costs that go with it. Likewise, if I know that there's a cost with going after a piece of business, I can make a management decision or an owner decision about whether or not it's actually practical to do that. Am I willing to take the risk of developing this job, writing the proposal, doing the budgets, doing the pitch, doing the site surveys, getting some working drawings together, creating a rendering, and spending sometimes $3,000, $4,000, or $5,000 on a job if you don't think you're going to win it? None of that's free. Here's how we make it a profit center. Now, likewise, if I do sell it, then I may even get some cost recovery out of it. Now, crew and staffing can obviously be a profit center. Many of my clients will recognize this in that I often take my show crew and my warehouse crew and I give them to a profit center and they control their time and schedules. And if the warehouse crew needs some extra help, they can go to the show crew and see if anybody's available and whether or not that department wants to rent them someone. Likewise, if the show department's busy and they want some of the warehouse crew and they're not busy, they can go and rent them. It's all about who controls that resource. Well, I can take all of that and put it into one department, which is called the staffing department. And these also would be the procurement for outside staff or outside freelancers or staffing companies that you engage in order to do fulfillment on jobs. Okay? The cost of labor from this department would really, therefore be market rate. There's a markup or a handling fee. If I go through the department, I theoretically pay a slightly lower rate for staffing than I would if I went outside and tried to procure it on my own as a project manager, because I want to encourage my jobs to buy from my company. And I want to task the profit center with finding the most profitable way to fulfill all of the jobs and buy for all of the jobs, right? The job only pays for what it actually uses, okay? And you can provide staff to other departments. You can maximize full-time staff resources that you have to get high utilization on. But likewise, since this is a profit center, they can say, here are positions that we don't need to have full-time because we don't have enough demand, and that skill set is too specialized and too expensive to apply to any of these other opportunities that we have. I can increase my departmental profit by removing these people from our full-time team and outsourcing that skill set. And now you've got people paying attention to that whose interest is in the company, making this department profitable to make the company profitable, but they're also interested in supporting their best customer, which are the jobs from inside their own organization. See how this works? So now we don't have the fox watching the hen house where, project managers and or salespeople looking after their own best interest on their job and making decisions that are only valuable to the job and not valuable to the organization. Now, there's middle ground in all of this, but again, I'm trying to get you to rethink how this works. In sales, just to make sure that you're completely scrambled, sales is also a profit center. Every proposal or marketing tactic is a cost of sales. Okay, so I've got revenue, cost of goods sold, and then the very first thing that I put in the expense group, below the line expenses, is cost of sales, which is sales salaries, commissions, marketing, advertising, all of that kind of stuff. Whatever it takes to acquire business goes into that. Now, the cost of a proposal, production management, demonstrations, design, pitches, all of that affects sales's bottom line as a department. Okay? So to make sales profitable, it has to win jobs that generate gross profit, but it has expense in doing that, and it has margins, it has targets that it has to meet. So some part of sales might actually be outsourced to reduce the cost of sales. In other words, reduce the financial risk to that department to make it a profit. And I'll give you an example here where we used outside sales and how that might work and how that looks in the agency model, because I know right now your head is probably blowing up about that concept of having somebody doing sales for you who is not a full-time employee for your business. Now, all of this can be done in very small steps. I'm delivering a huge concept for you. For many of you, this is a major change in how you approach business. But my goal today is just to get you to change your mindset about how you look at these things. So take smaller steps just as you need them, right? Think about first, maybe just developing proposals and budgets from cost. The job cost analysis methodology, the JCA methodology that I've taught many, many, many times. This is how you do that. Apply that here. Put a cost on everything that goes on to a job and then add margin to it, just like you would on an installation or a product sale. Just like every other industry in the world does, except, well, for us. Assign cost to your product inventory to do this. So in your R2, Flex rental system, whatever you have a place where you can assign a cost to everything. There are formulas that you can use. There's methodologies that you can use to determine that. It is not as daunting a project as you think or you want to think it is. The fact is, having nothing there doesn't help you at all. Having something there will make a huge impact, and then you can improve it later. Staff labor needs a cost. Everything has to have a cost on a job. And you can estimate the use of admin for a particular kind of job. That is a cost of a job. If I have a job that's going to have 20 invoices on it, and we've got 4-stage terms and conditions billing, confirmation, progress billing. There's a lot of accounting that goes on in that, a lot of bookkeeping that goes on in that, not to mention chasing down payments and managing purchase orders. There's some cost in that. That's how you start to understand how the agency model works. Look at everything that happens because you sold a piece of business. Every person who has to touch it, who has to do anything, now becomes a cost center and a potential profit center. So start working from that, and you'll be halfway there to getting your head around all of this, and you will immediately find you're controlling costs. And if you have people or resources in your organization that are never, ever applied to a job, ask why, because maybe you don't need them. Burden. Burden is an accounting term. I don't really know the origin of it. I don't really want to know. But burden is that number that accountants often apply to an idea saying, well, here's the cost of the overhead to make the company. Burden, I only see this in companies that are trying to job cost. Burden is a failed attempt to allocate something that could have been quantitatively ascertained if it were not for the weakness of leadership. So because we haven't asked our employees to record their time, because we haven't broken down the steps and the time it takes to do something, we haven't gone back to figure out what things actually cost. And so we're trying to throw a blanket number and apply it as a percentage of revenue or a percentage of this or a percentage of that to save ourselves from doing a little bit of research, a little bit of work, and keeping a few more records that would be really valuable for your business. So burden is a trigger word for me. Burden is one of those things that's going to get me off on a tirade pretty quickly with somebody. Now, in order to make this model work, everything I'm talking about in the agency model, you're now going to have to think just like your accountant does, your accounting firm, your law firm, most professional services, a lot of certain types of consultants keep time. Everybody keeps time. Timekeeping is important. I know you hate it. I know your people hate it. I know nobody wants to do it, but let me tell you why. You need to do it, okay? So here's a very simple thing. So here, I'm the project manager. This is my weekly timesheet. It's probably 4 or 5 times as many lines as this, if we're going to be honest with how a week typically goes. On any given day, a project manager may be working on 5 different jobs, jumping from thing to thing, meetings here, phone calls here, text threads over here. We're spending 20 minutes on Slack arguing about something. Okay. We have to have the discipline of tracking that time and where our time goes in order for any of this to work. But that same discipline is actually going to improve your organization. So I spent a couple hours doing proposal design on a job. It was an ideation session. I sat in a meeting. We brainstormed. It's very valuable. Hopefully we'll win the job. Then I go back to a job that I'm getting ready to do. I do a couple hours of drafting, 4.5 hours of drafting. I got documentation, pre-pro documentation that I got to get together and send to the crew and the hotel letter. I have travel time. Now, I don't know about you. I don't work when I'm traveling, so there's nothing else going on because I'm traveling, but I need to record that time because it charges to the job. Okay? And then I have another job where, well, I don't know, it's not a job at all. It's inside admin. There are computer updates. My computer won't operate correctly. I've got to update software. I'm going to be down for 2.5 hours staring at the ball or doing a backup or whatever it is. We just code that to something, okay? I also have a day off because I have a doctor's appointment. We don't want to talk about it. I don't want to tell you what it's for. That doesn't really matter. I have a place that I can code that 8 hours of PTO to, right? This is no different than your timekeeping system now, except that it's way more important in tracking things to jobs without getting, well, overly detailed, but I can bill everything back. Now, will I bill a job sometimes more than the job wanted to pay? Yeah, but I'm still going to bill the job, okay? Somebody is still paying for it. The customer may not pay anymore. The job may make less money, but we'll know where less money was made, and we can go back and directly tie that to our work discipline, our adherence to scope of work, over-delivering, under-delivering, whatever it might be. Maybe we're good at estimating, maybe we're horrible at estimating. All of that data is right here, and all of it is vitally important to the agency model. I'm seeing a lot of comments happening over here. I can't wait to go over and see them, but we're getting real close to that time, and I want to answer some questions, and I do want to read your comments. In this model, I can't say it any more clearly than this, all of the team needs to account for their time. That includes everybody in your admin staff. It includes probably you, the owner, because you do a lot of stuff that is actually billable to jobs and it's valuable to jobs, and the job should know that it's using that resource. We can't fudge it in there. In a lot of timekeeping systems that I have seen implemented, there's often a lot of fudging of numbers. There's time estimating. The worst thing you can do is estimate a percentage of your week that was spent working on a job. That is horrible. You all know full well that when you're working on a job and you're a project manager, you're working an 80-hour week. So telling me you spent 50% of your time working on a job doesn't tell me anything. Telling me you spent 40 hours working on a job tells me a lot. Tell me what those 40 hours break down to and which profit center you were working on tells me even more. So we don't want to fudge numbers. We have a very simple way to qualify and measure everything that we do so that we can make money on everything that we do. Now, take a breath. Let me walk through a process. Let me walk through a job in the agency process. I've got a nice little narrative here. I'm going to read it for you. Know that every step that's on this cycle here, somebody has got to pay for all of this. Now, whether the customer pays for it or not doesn't matter. I mean, it does, but for the sake of understanding how this works, just know that somebody's going to pay for it. The company's going to pay for it. The customer's going to pay for it. Okay? It's got to get paid for. And there are speculative investments and decision points in all of this process. So bear with me. Here's how it looks. Your contract salesperson brings in a lead, right? They got a hot one. They want to connect that job with you. So you and the contract salespeople work out an agreement to commit that lead to your company in exchange for supporting and developing the project. Now you guys are working together on this project. Great. You are the general contractor. Okay? The general contractor provides the marketing and pre-sale support. We're going to talk about that more in 2 weeks, about what we need to provide for pre-sale in this streaming hybrid environment and as it applies to all this. So bear with me on that. So as general contractor, you're going to supply that support. There's going to be client meetings, capabilities, pitches, discovery meetings, ideation sessions, strategy sessions. Eventually, you're going to have to develop a budget for the job. You're going to develop a proposal for the job, and you're going to go out and sell it and close the deal. Okay, these are all steps as we go around the chart here. Now, at some point, we close the deal, and somewhere in there, we're going to put our project team together. Some of whom may have been involved in this. You may have had your producer or your TD involved in up to this point, but we're going to have to finalize our project team, which means we're going to start making financial commitments. So this would be another one of those decision points. After we decided to pursue the job, we're going to make another decision about to actually run the job. Okay, so we want to contract that team, producer, TD, project manager. All of those people are going to have profit incentives because this is a profit center. So they're going to buy and execute judiciously in order to generate a profit. So they care how much time is being spent on things, and they're going to budget that time for this project, and they're going to track it. That's their primary job, is to make sure that we don't overspend for the wrong reasons. They're going to have to hire the event crew through the staffing department. They're going to have to hire a prep lead, either through the staffing department, or maybe the equipment department has a prep lead they can provide. Maybe you need departmental prep leads, which may or may not be available in-house. Okay? We have to contract and schedule all of these people. The company may have a short list of folks that they prefer to use, or their own staff or part-time people that they like to bring in. Or in the true production rental model, you go out and you hire the master electrician for your job, who comes in and runs a prep team with people that are brought in or provided for them in your shop. We have to coordinate with all the other projects. We have to coordinate timeline, which means that you're going to have to schedule time in the shop. You're going to have to reserve capacity from the drafting department. Okay, you're going to have to plan what your needs are and put them on a project timeline, which is what project management actually is. It is a profession. Okay, so we schedule time. We have to book floor space for the prep area, and everything has a cost. If I need a 40 by 40 prep area, I've got to pay for that. Okay? I have other jobs that need that, so it's going to have to be scheduled. Maybe I can do it in 20 by 20, who knows? Okay? All costs are charged back to the jobs, including the shop time, the accounting time, everything that it takes to get the job done. Now, equipment fees, renting the equipment from the general contractor, from your own internal profit center, is typically going to be below market. It's going to be up to 25% below market, because you want to encourage the use of in-house equipment. You want to encourage people to tool and design their jobs to fit things that you can supply cost effectively. But it doesn't always work that way. Sometimes we have to go out of house because we don't want to own the gear. Having fun yet? All right, now travel, trucking, expendables, all are procured by a job team from within the in-house department or through procurement that handles like logistics. So logistics can handle all of that. Logistics can have sub-departments in it. I've seen trucking and travel and equipment allocations all fall under logistics, and we pay for that time. And they can look at the job and say, okay, I estimate that it's going to take this much time, and here are your fees for the travel that you need to buy, and here are the estimated costs for the trucks that you think you need, and we can help build all that budget. So now we execute the job, we go back and reconcile all the expenses, we charge the client what the client is going to pay, so the client will clear the final bill, we pay out commissions and bonuses, and then we move on to the next job. We start from zero and we finish at zero. Okay. If we use something now, just because it's overhead for the business doesn't mean it's overhead for the job. We only pay for what we use. Okay. Anything we don't use belongs to the department, who it is in their best interest to have something else for them to do. Otherwise, that department starts to lose money. So each job is not responsible for the profitability of the entire department. They're only responsible for the profitability of the job. And we put the profitability of the departments on department managers, who will make better decisions. They will make departmental decisions to support their internal customer and their bottom line. Crazy? Yeah. Now, before anybody asks, how do you do this in a rental model? We're a rental company. This doesn't work. This doesn't make sense. We have onesie, twosie orders all day long. I need to have a warehouse crew. We're doing rush deliveries 3 or 4 times a day. Don't worry. There is a model that works for this. And an agency model, every product in your rental catalog will have the cost built in for prepping and de-prepping, and it's all built into it. And so if I break down a job, a camera system, which has these components that some of them I can rent individually, I have the prep and de-prep time built into this. Now, this is a simplification because I might have different prep and de-prep time for like the lens and tripod. That might have additional time. But for a system, this is that time for this. Now, that may not look like enough for you. Fine. Figure out what it is. Make yours more. The cost recovery for the shop crew that does this work is based on what we talked about 2 weeks ago, which is burdened cost, which is basically take the hourly rate that you pay a person to do this and double it. And that captures pretty much all of your costs. So on an hourly basis, 10 minutes, 6 times, I have 120. Basically, I'm looking at somebody who costs $20 an hour, and I'm going to use 10 minutes of their time. So they're really a $40 overhead cost. Figure it out. The goal is to reduce the time used to increase the shop profit. You know, when you go get your car fixed, you get a time estimate that says we charge 1.5 service hours to remove and replace this item. It's called R&R. A good mechanic can do it in 70 minutes. A great mechanic can do it in 40 minutes. They get paid for 1.5 hours. They make more money. Okay? If I have a crew of people that can do this 10 minutes of prep and 20 minutes of de-prep in less time, I will make more money because I'll have a better ROI for my business, because the job's going to pay the $60, right? The warehouse might pay less to get it done if it hires properly and trains well. So that's how it would work in an agency model. The warehouse operations become the profit center. The cost of running warehouse and demand is built into the model. Some of that downtime and idle time is built into the model. and I'm not paying anybody to sweep the floor, because sweeping the floor is part of DPREP. So the floor gets swept because we finish every day in a zero state. Remember that webinar? Everything's back to normal. We go home, the next crew can come in, everything's where it's supposed to be. All of that cost is built in to what it takes to get the jobs in and out the door. Okay? We don't have a warehouse in the state of array because the jobs pay to get things back into order. Wow. I'm glad I had some extra coffee before this. So, summaries. Change your mindset. Nothing is free. You can go to the client and say, here's what's included, but the fact of the matter is it costs something and you have to account for it. In order for this to work, you need better planning and budgeting. All of that's going to reduce your demand for time if you're better at planning and budgeting. You want to reduce costs? Track your time. You will reduce costs. You improve what you measure. Right? It's probably the one thing all of us could do that even in our old model would have made you infinitely more profitable, is simply having the discipline to track time and having the fortitude as a leader to insist that it be done in spite of all the objections that you're going to hear from people. Every job is a P&L. There's a beginning and middle end of the job in financial terms. So we can track all of that. We can see how a job is doing, what kind of progress it's making, what do we budget, what's been charged against it. All of that's very, very accessible. You can do it in real time with apps on your phone that you can download off the internet that need no customization. All right? Crazy? Yeah. Now, I'm going to get some questions here. Next week, we're going to talk about ghost operations. How do I run a rental business without people? Because for some of you, if you're down to 2 or 3 people, you don't have your 5-man warehouse crew anymore and you don't need them. So how do you do an on-demand operational system? Email me questions in advance about what you want to make sure that I talk about, and I'll make sure I work it in there, but that's going to be a fun one as well. If you need some time with me, please schedule a call. Somebody said earlier, if this link was wrong, I'll make sure on the replay page to update all the links that I want you to have. I may have put a wrong barcode in there, QR code in there. Micro coaching. If you want some hand-holding to get through some more of this, I'm available for you. It's what I do. I'm really pretty darn good at it. If you want to get somewhere faster than trying to figure out how to do this on your own after a webinar, give me a call. Let's talk about what that looks for you, and we'll find an economical and time-sensitive way of getting that done for you. So let's wander over here into the chat. And while I'm scanning through here, and hello to everybody, it's nice to see some regular faces. It's raining in Orlando in the afternoon. Who'd have thunk it? That never happens in July. The agency, Joe says the agency model is going to be at the forefront of those companies that bounce back. Yeah, absolutely. I agree with you. Thank you for sharing that. Okay, so how is that for scheduling? Oh, okay. All right. Beth Knight, our advocate at Avixa, has got some notes on there for you. Thank you, Craig McCormick. He posted his, and I've shared this on social media as well. Craig is a fantastic writer, Commercial Integrator Magazine. He's been following all of these and gleaning what's important out of it. He's doing some great summaries, and I really do appreciate it. So go give up your email address and read these things and have access to them because they're really, really good. So yeah, I may have had the wrong QR code up there, Peggy. We'll get that all figured out. But it's trust me. There's the live events registration, the forum next week. I'll make sure that you have that. I'll put it on the replay page. Make that really obvious for you. Interesting comment about delivering PD to a job site where we've switched to a Venmo delivery of PD to people per diem. A very small group who wants cash is learning to get over it. Yes, it's July of 2020. Cash per diem ended about 18 years ago. So yeah, get out of the cash business. I understand why people wanted to understand the issues behind it. and what it means to your workforce. There are better ways of doing it. No one should be handling cash for events, particularly walking around with large wads of money to give to a crew. Not a good thing. Thank you for the definition of burden. I know that later. Yes, but it wasn't you, oddly enough. Let's see. So like in the firm, everything is billable. Every minute you spend on an account, even thinking about that account, et cetera, can be tracked back to jobs. Yes, yeah. I mean, you've certainly seen this, and we've all seen movies and read books and have seen this model. That's why I always bring up Mad Men, because that's the world that they lived in, and you start to get a sense for it there. Thanks, Mitch, for the great comment. Justin asks, would you speak more to the difference between pitches and proposals? A pitch is what you do to qualify yourself to a customer in order to get the opportunity to write a proposal. So for instance, a customer comes to you and they say, hey, we're interested in doing this big experiential marketing event. We would like to do some, put the projectors on that building over there. And you go, oh yes, projection mapping. And yeah, do you guys do that? Yes, absolutely, we do this. But tell me more about what you want. And then you finish up by saying, look, you need to understand more about our company. What I'd like to do is tell you more about our business. Can we schedule a time to do that? That's a capabilities pitch. Another type of pitch is, here's the idea we have for your project. And I'm going to pitch that idea for you. I said, your budget's going to be somewhere between this and this, but I don't have a proposal for you because it's just a pitch. Matter of fact, I've got 3 pitches for you, and depending what the customer is interested in and what the budget range turns out to be will influence what proposals I actually write. So a pitch doesn't always happen, and sometimes a pitch is just a conversation between a salesperson and a customer. But in other times, it's a company effort to put yourself forward and demonstrate to your potential customer all the things that you do as an organization. Eventually, we'll write a proposal or an agreement, which is about a specific piece of business that we can either confirm or turn down and move on. And I hope that clarifies that for you. So this was fun today. I hope you enjoyed it. I hope you got something out of it. One more question. Can you explain more about how we do job cost PTO? Our GM is on vacation for 10 days. I think that's overhead. No. Yeah, that is absolutely overhead. That is the cost of business. So if you've got an employee on vacation, paid time off is always an overhead expense, and you can't recover it. Okay? Which you have to take into consideration when you're taking an employee full time, because part of their cost is all of those PTO days. Now, in a general manager, that's going to be overhead regardless. But if I'm talking about a project manager who has PTO, those PTO days are figured into the cost of a project manager per hour. In other words, doing the burden to formula for hourly labor, where we take their hourly rate and we double it. Part of what's in that doubling is the cost for PTO and the cost for downtime. So doubling is an imprecise way of getting to a number that you can discern very, very mathematically if you want to, but it's a napkin, it's a wet thumb number to help you move through the process and think how it works. So thank you for that question. Thank you for the comments, and everybody. Thanks all of you for all the support. You've been great. I sure appreciate you. And we're going to get this thing in the can, get it up on the website, and I'll share those links with you. And we will see you next week, and we'll see you at the Live Events Forum right after that. So be well, be safe. Talk to you guys soon.